Hey, what's going on, my friends? In this video, we are diving into our brand new growth portfolio for an update to see how things are going. Because after the first, that first video I released, giving you guys an update, man, things were insane. We were up 100%. Are we still up big? Did this just crash? Was it a dump and pump and dump, or whatever, jump and hump? And I don't even know. But the point is, we gonna dive into this portfolio to see how things are going. Did I make a good move? Was it a bad move with some of these companies? Let's see. But really quickly, if you haven't yet, like this video, it does help with the YouTube algorithm, and it does show me you guys appreciate the time and energy I put into the research and making these videos. And after that, subscribe to the channel, hit that notification bell so you can stay up to date on all of our latest and upcoming videos. So as you guys can see, over the past day, we are down. We're getting in the red over here, negative 0.065 cents. Percent, excuse me. The past week, we are down negative 7.93%. Ooh. In the past month, we're actually up 82.11%. The past quarter, the past year, and all time will all say the same thing because we haven't had this for more than a month. And as you can see, our gain is $370.71. Like I said, 82.11 is our return. Given our current total value, $1,000. Well, $1,070.69. But we up there, baby. We up there up to over $1,000. And again, we started this portfolio back on October 8th with $100. And then we invested an additional $600 back on the 19th, which essentially all we did was add $100 to each of our companies in our portfolio. And from that $700, you can see we are up again $370. Not too bad. So where is the gold at? What's doing it? How are we killing it so well? Because having a portfolio that's less than, well, that is basically exactly a month old, almost exactly a month old, and this will go up when we do our 1 month update, because we're a little less than a month, and I hadn't contributed anything else to this portfolio. So I mean, what we have to decide is how much we want to contribute and how often. And I think I might just do a similar approach to what we do with our dividend portfolio, where we add just $25 a week every week. And I think we might do the same thing at the start of the week, just add $25. So maybe today, right now, while you're in this video, maybe I'll set it up where we set the autopilot, I like to call it. And you don't have to worry about anything. This is why I love M1 Finance. It's easy to make these pies, very easy to understand what's going on, to read your charts, and to see your stocks, see who's doing well, trade people out, rebalance your portfolio, which we might want to consider doing since we are killing it with backed holdings. And this is taking up 37.4% of our portfolio when when our target was only 15%. We didn't want this to be that major of a player taking that much of our portfolio. So while it is up, while we are doing so well, we might want to rebalance our portfolio, because some of our other guys that, yeah, maybe they're not doing as hot, but the share percentage of how much we actually own of them is lower than that target amount. So Palantir, I'm sorry about that. So as you can see, Palantir and DraftKings, for example, those are both well below their target of 14%, whereas they're both 9.5 and 8.1. So yeah, when you rebalance your portfolio, it might not look as good as it is as you want, but it's making things kind of more aligned with your initial goals and vision, and just kind of keeping you diversified but safe, and however your target was, whatever your goals were, to have it allocated towards, rebalancing your portfolio will help you get back to that point, which means taking some of the gains that you have from a company like Backed, where you can see we're up, up to almost $300 just for this company alone, and we can spread that wealth, buy some of these shares from other companies, and bring that target amount up higher. So it's things like that we have to consider with our new growth portfolio that makes it more important to do these type of things with this portfolio than our dividend portfolio that's not as volatile, it's not as up and down and risky and whatnot, because hey, I mean, when you see this gets up here to that $1,162.90. It's pretty good, right? Pretty good. But it's only gone down from there. And again, I think that was primarily backed holdings. That is the reason that's the case, because that just really spiked and took off and ran for us from the jump. So when we scroll down and we look and see, okay, who's killing it, where's everyone at, who's not doing so hot. Let's scroll down a little bit more. There we go. Okay, so we can see we have backed holdings, which I made a whole video on backed holdings, who they are, and why I decided to add them to our portfolio from the jump. So definitely check that video out. If I remember, I'll add it in the top corner up there in the description. But backed holdings is killing it with a return of 283.65% still. So, with something like this is where it's like I expect, and you have to pretty much expect for the most part, that things will level out, stay flat for a bit, because things just ran up so much so quickly with backed holdings. So I'm not surprised that things have kind of gone down a little bit or just kind of plateaued and leveled out. That's good. That's what we want to see. We don't want it to drop, but if it can kind of stay even, perfect. Going higher would be even better. That would be perfect. So after backed holdings, we have Nvidia, where you can see a 33.57% in our return. And then in our EV pie is ChargePoint, and that's 31.33%, followed by Coinbase, where you can see we're up 10.88%. Then we have Palantir, where we're up 5%, and then Fuel Cell Energy, 4.45%. And at the bottom, we're down kind of big. DraftKings, 10.69, negative 10.69. And again, you can't sweat the small stuff. You can't sweat, what you're seeing right now with the volatility in some of these companies. Backed holdings, if we jump in here and you look and see, this went all the way up here to 523 that we were at, $523.50, and we're down to, $400 again, pretty much. So that's, a huge difference right there. And again, you can't really be surprised, though, because of the excitement behind it. It's a new company that just kind of IPO'd, went public, and it's going to be volatile. It's going to, some people might have thought it was just a pump and dump and it just ran up here, and then they thought it was probably going to jump, and people probably took their profits and jumped ship, not knowing that, no, this actually seems like a legit company that has a good opportunity ahead of it. And, more people jumped on board, and it has kind of evened out. It might go down a little bit more, like I was saying, but I think we're going to see good support, if it goes a little bit lower. So I'm not too worried about that. The thing that makes it most risky is that they haven't proven themselves. And again, this is a growth portfolio. So sometimes that's what you have to do before a company has developed into the powerhouse that it can be and that it will be. You want to get on board with it and invest in it and grow with it, because if you could have gotten on board with Amazon or Tesla before Tesla reached, where it's at today, that would have been pretty good if you got in with it when it was only a few dollars, right? And that's what we're trying to do with this growth portfolio. Find the next great opportunities, the next, sound, stocks that you can have in your portfolio that's going to continue to make you money, in years to come. Yes, there might be volatility. It might go down a bit, but you can't give up if the company is staying firm to their, their plan, their business plan and motto, and they're rolling out a good product, and it actually is, developing as we would hope. That's what you want to see, because then it's going to take off at some point, and you want to be there where you have tons of shares already and you're already on board with it. And when it runs up and then it starts to being all crazy, you don't even care, because you have been there from the jump. You are already on board. You're not sweating it. And that's exactly what we are experiencing with backed holdings, where we got in with them at, so early on that it was fine. And now, the price is at $32.61. It's like people who are just getting on board with it are freaking out, panicking if it goes up and down a little bit. But again, we got on board so early, our average is so low. Now, that said, this is just a small growth portfolio. We only added $100 to each of these companies. So things will, as we add more money to our portfolio, that's going to make it a little, that's going to bring up our average, right? It's going to bring up our average. Our average is down right now. It's low because we bought in before it took off. But now that we're going to continue to contribute towards backed holdings, even at its current price point, that's where things start to get a little more, volatile, and see those up and downs a lot more. But again, you can't freak out. You can't panic. And you just got to think, This is a long term. This is a marathon. It's not a sprint. So anything that happens in the short term, any red you're seeing, any blood you're seeing right now, don't sweat it, because that's going to happen, right? You might see that, especially when something takes off so much. Expect it to come down a bit. It's just like Tesla right now, But in the long run, hopefully, you want to see it just continue to go up, even though it's going to go down at times, right? So that's what this portfolio is all about. And what I've just decided, what I think we're going to definitely do is do $25 a week. We're just going to keep this portfolio aligned with our dividend portfolio. We're going to add $25 a week to this portfolio, automatically set it up on autopilot. Again, that's why M1 Finance is so great, because all you have to do is come in here. What do I do? Come to deposit. We'll come to select your account. We can type in $25 right here, and we'll come down to switch to reoccurring schedule. Now it says, how frequently do we want to do this? We can do it monthly, and we can actually decide if we want to add just $100 to this portfolio one time, once a year, once a month. We can easily do that as well. Or we can do it where we just contribute, weekly, every Monday, or let's see. Yeah. The start of the week, every Monday. Things might be a little crazy then. That's, I feel like, when you're going to probably see the most volatility with your money being added, because the market might be craziest at the beginning of the week, but we get it done with, get it in on a Monday. If you get paid on Friday, which, if you have a job, I'm self-employed, so I get paid every day or different times, but we're going to do that every week on Monday. We're going to do $25 a week going into our new growth portfolio. Press confirm, and it says a schedule already exists for the selected accounts. Okay, so I already set this up. Perfect. Our portfolio, we already have a scheduled thing for our deposit that's going to be added to this portfolio for $25 a week. So we're good. Monday morning is the next trading window at 9:30 a.m. So expect some new movement and activity a lot of activity taking place here Monday morning, because of that auto deposit of $25 that will be added into our portfolio, spread out among all 7 of our companies. So the big thing next at this point really is determining and deciding, keeping our eyes open for other good opportunities, finding another good potential backed that we can find where, hey, this stock price is a company that's going to be $32 in a few weeks, a few days, a few months, and it's at $8 or $7 or $6. That's what you want. Those are great growth opportunities. But furthermore, a company that's going to be even higher, much, much more in 5 years, in 10 years. It's not about just a few months. It's more of a swing account. This is a growth portfolio. So this, we want this for a year, 5 years, 10 years, possibly 20, So this is, again, it's a marathon, not a sprint. And if you want to get started with your own growth portfolio or create a dividend portfolio, I have some links down below where you can start and fund your own account with M1 Finance, and you can get some free money, as well as Webull, another one of my favorite investing platforms. You can get some free stocks if you start and fund your account with them. So I hope you guys found this video helpful. If so, definitely like this video. Give it a nice thumbs up. It does help with the YouTube algorithm, and it does show me you guys appreciate the time and energy going into these videos. After that, feel free to subscribe to the channel. Hit that notification bell. That way you can stay up to date on all of our latest and upcoming video content. And on that note, you guys already know I got to keep it moving. But I'll see you in the next video. Peace.